I don't see enough people talking about this here. Crypto has completely changed in the last 1 to 2 years. It all used to be about trading on the blockchain, maybe trading on centralized exchanges. It was all about buying and selling tokens, but that's not the case anymore. Instead, the vast majority of trading now happens simply with bets on the price. People are trading derivatives, not the actual asset anymore. This is the decentralized exchange perpetual futures trading volume over time. The market has 10x in the span of just 5 years. And there are not enough people analyzing the data that comes from those bets on the price. There are some interesting findings. For example, this is CoinGlass's CDRI, the CoinGlass Derivative Risk Index. Now, when this is very low, it might make sense to buy. That was the final capitulation after FTX went belly up, when Bitcoin was only at 16K. That's where we hit an extreme value in the CDRI. We also hit an extreme value, but to the other side, when Bitcoin got closer and closer to the 60K, where then subsequently we saw a retracement. Currently, we are somewhat balanced. We are not in extreme risk territory. We are also not extremely low risk. But we can clearly see that over time, there's more leverage embedded in the market. When people use perpetual futures, they are betting on a price potentially with leverage. Now, they tend to only trade very short term because buying and selling is very cheap on the perpetual futures market. There's very little spread. But holding an asset over the long term is expensive because there are financing costs. We do see though that over time the open interest on various assets is growing faster than the price. This here is Bitcoin, and Bitcoin since October of 2021 has roughly doubled in price. But the open interest, it went from 13 billion all the way to 60 billion. So that has 5x'd. It grew much faster than the price. Now this is for Bitcoin. For Ethereum, the situation is very similar. The price barely changed since October of 2021, but the open interest went from 6 billion all the way to 18 billion, a 3x. Now, why does this development even matter? It matters because the spot market gets less and less liquidity because it now moves to the perpetual futures market, and the perp market has leverage. If there is a bigger movement on the spot price that potentially liquidates some of those perpetual futures, some of those people that bet on the price, we might get a cascaded effect. And we've just seen this last week. Have a look at the following. In green, we see the market cap of others. So that's the market cap of all the altcoins that are not in the top 10. And during that deleveraging event, when so many perpetual futures traders got liquidated, the market cap of the entire smaller alts contracted temporarily by 48%. Now compare this with the Bitcoin price during the same time period. It only contracted by roughly 10%. So there's way too much bets on the smaller alts relative to the available liquidity. So it seems to be attractive at the beginning to trade perpetual futures because of the very low transaction costs can in the end blow up massively. Many people have lost all of their funds during this flash crash. It does not take much leverage to get wiped out during a drop like this. Some people lost tens of millions of dollars. 82 million over here, 36 million over here, 34 over here. And just have a look at the ROI in the last 7 days. Some people lost 100% of their capital. The vast majority lost more than 80%. And it goes on. There's so many people that lost everything because of this massive inherent leverage in the market. Not enough liquidity in the smaller altcoins relative to the amounts of bets. It's not as much of a problem for Bitcoin, but it's more and more of a problem the smaller the cryptocurrency is. The open interest tends to grow faster and faster relative to the market cap, the smaller the project is. Now, yes, some people lost everything, but the overall market seems to be okay, apparently. Yes, the amount of bets on the perpetual futures did go down. This is the open interest over time. It went from 223 billion down to 154 billion. So there was a drop, but really it's the broad masses that lost it all. The number of traders on Hyperliquid went from 50,000 all the way down to 23,000. More than half of the perp traders completely exited the market. And now some people are coming back. We are slowly recovering. But again, more than half of traders completely lost it all. And who gained from all of this? It's of course the market makers. It's the heavyweights. The hyperliquid liquidity provider jumped by 42 million. And it took 1.5 years to generate the first 80 million worth of profit. So a single day was as valuable as 9 months of market making. And so it seems like there is the dying breed of the spot trader. There is the long-term holder, the people that just buy into Bitcoin and hold it for the long term. And there is the short-term trader that trades with perpetual futures that might have lost everything, but now people are coming back to that market again. But when we look at the number of search queries for Bitcoin over time, we can actually see how this is going down from cycle to cycle. The Bitcoin price went from 20K all the way to today's prices, but the search volume for Bitcoin is now much lower compared to 7 years ago. And so the reason why crypto is appreciating over the long term is not because there's more and more hype building up and every wave sees more hype than before. It's because the investor base that buys into crypto tends to just buy in longer and longer. As in, especially the Bitcoin investors, they just dollar cost average in. They see Bitcoin as another form to store value in. So the number of investors might actually not grow that quickly anymore. But the investors that are in the asset, they allocate more and more of their capital over time. And so I do think that long term, the cycles will get muted. Here is the net unrealized profit and loss for Bitcoin over time. We can see how the tops tend to decline more and more. In the early days, we had more than 80% of net unrealized profit for the entire market. So the average market participant was more than 80% in profit. And then, of course, when we enter a bear market, that turns around and we can go all the way down to minus 80% for the average market participant. We oscillate between both extremes every now and then, but especially the top, it tends to decline over time. People take profit earlier and earlier. The bear markets, of course, are also not as severe anymore. People are always wondering, when are we going to see altcoin season? There's a dedicated index for that, the altcoin season index. How many altcoins outperformed Bitcoin recently? And sometimes we are risk on, sometimes we are risk off. Currently, it seems like the altcoins underperform. But I actually do not like this index. The reason is the altcoins are highly correlated to Ethereum. So we've got the altcoin market cap, total 3 ES. That's the altcoin market cap minus the stable coins. And in blue, we see the Ethereum market cap. So the two market caps mirror price developments very, very closely. And the reason for that is coupling with the altcoins. Many altcoins get traded directly versus wrapped Ethereum, not versus the US dollar. In other words, if Ethereum goes down by 10 or 20% in US dollars, then automatically those altcoins also go down by 10 or 20% without a single trade ever happening on chain. So really, altcoins are priced in Ethereum. They are not priced in US dollars. And that's why we see this strong correlation. And that's why this index doesn't make sense. It's much better to look at the altcoin performance relative to Ethereum. Is money currently flowing from the altcoins to Ethereum or from Ethereum to the altcoins? So altcoin season really is only when the altcoins do better than Ethereum. The comparison to Bitcoin doesn't make as much sense because we don't have the liquidity pool coupling with Bitcoin. We have it with ETH. And so let's have a look at exactly that. This is total 3 ES divided by Ethereum. When we've got quote unquote altcoin season, we see the alts doing better than ETH by roughly 200%. When Ethereum outperforms and the market is rather risk off, we see an underperformance of the altcoins by 68%. Now the altcoins underperformed Ethereum since the middle of April of this year, because that's when Ethereum was massively bought through the ETFs and through the treasury companies. It seems as if we only see altcoin season when the market cap of the alts roughly equals the market cap of Ethereum. So at the top, the market cap of the altcoins is roughly 3 times the market cap of Ethereum. At the bottom, the market caps are equal. And so I am not touching any long-term altcoin investments until we hit that level again. I want to see the alts further bleed versus Ethereum. I'm not bullish on Ethereum right now, but I'm even more bearish on most altcoins. Again, because the momentum is currently against the alts and because we are not particularly cheap relative to Ethereum. And again, the Ethereum valuation matters because this is how the capital flows. It flows from the alts to Ethereum and from Ethereum to the altcoins. US dollar prices of altcoins do not matter because again, they are also massively impacted by whatever happens with Ethereum directly through the ETFs and through the treasury companies. The additional risk of getting into altcoins only makes sense when the alts historically are cheap. And the flash crash that we have seen recently was just an introduction of how bad it can be. We haven't even reached the bottom with that flash crash. Of course, we have now majorly recovered again from the flash crash, but still, I expect us to see even lower prices compared to the bottom of the flash crash in the next months for the altcoins. Many perpetual futures traders got wiped out. The market is slowly recovering, but probably we don't have to wait too long until enough leverage has built up again and we will see another very similar crash. Really, structurally, the market hasn't changed. We see a continued buildup of leverage as we appreciate in prices. And then once we've got enough leverage, then we potentially just have a little bit of a blip in the spot market that creates a cascading downward spiral where everybody gets liquidated. Now, isn't it fascinating how for most altcoins, the movements to the upside tend to be much faster compared to the movements to the downside. We shoot up and then over a long time, we trickle down. Here's the example of Dogecoin relative to the others market cap. So when there's news, when there's a lot of attention, the Dogecoin price shoots up within 1 or 2 days to then come back down over several months. We're seeing the same for the Trump token. We shoot up. This was the announcement of the dinner. And then subsequently, we come back down. There is a difference though between Dogecoin and the Trump token once we zoom out. So again, this is Trump relative to the others market cap. So the market cap of all of these smaller altcoins, and here is Dogecoin relative to the others market cap. So while we do have our pump and dumps in both cryptocurrencies, the long-term trend is very different, as in Dogecoin just goes with the overall market. It simply just trades in a somewhat constant range, while Trump tends to long-term underperform. And there is a fundamental reason why Trump underperforms long-term, and that is tokenomics. It's new tokens that hit the market over time. Have a look at the following data. This is the number of Trump tokens that get released over time. We started off with 200 million. Now we are at 363 million. So it's the early investors, it's the team, etc. that cashes out over time. And that selling pressure, those vesting unlocks, that dumping on retail, that's what's creating the long-term underperformance. Now, some people say that markets are efficient and that everything is already priced in, but I don't think those charts show that. There is inefficiency, and we can simply turn this around. Let's say we've got Bitcoin relative to the Trump token. Then we're getting this chart here. So since Trump launched, Bitcoin outperformed the Trump token by 560%. This is how I believe we can make money in crypto. It's not trying to find the one outperformer among all those altcoins that always go down. It's doing the exact opposite. It's trying to be allocated in a way that we make money when the insiders and the early investors make money as well. When they are dumping on the average retail investor, we make money because things like Trump tend to underperform long term. As long as the token dilution continues, as long as new tokens hit the market, this chart is very likely going to go up. I'm making money with that strategy already for 4 years. This is a monthly chart. Had I just dollar cost average into Bitcoin, I would have gotten the return here in light gray. Instead, I got the return in black because I also bet on falling prices of various altcoins. It is a mistake just looking at US dollar charts. Really what matters is your portfolio value measured in Bitcoin appreciating over time? If the answer is yes, you're probably doing something right. If the answer is no, then you might just so stick with Bitcoin and dollar cost average into Bitcoin and stay away from altcoins altogether. The Trump meme coin is just one out of many examples. Most altcoins have an increasing supply, and so here with Balancer relative to Bitcoin, so we go long Bitcoin, we bet on falling prices of Balancer, we can get this long-term chart. The strategy looks quite straightforward. There are a few caveats though. So for example, here with the Bitcoin to Balancer chart, we do have a lot of volatility along the way. Where does this volatility come from? It comes from small market caps. There is some token manipulation. There is some short squeezing happening along the way. And the smaller the market cap is, the more volatility we invite. So while the strategy is long-term profitable, we have to be aware of the potential pitfalls as well. And so I made dedicated videos on the topic. How can we actually make money from those inflating altcoins? Most altcoins do poorly and we don't have to find the needle in the haystack. The one altcoin that does well, we can just bet on the haystack continuing to go down because again, the early investors, the VCs, they cash out and they dump on the retail investor. There are two important videos to watch: using perpetual futures on hyperliquid and risk management with relative valuation bets. It's half an hour each, so in total 1 hour of content. And after you've watched that, you know what to do in order to set up positions like this. Now, this here is currently my favorite trade. So this is the position that I will recommend to you once you have joined the premium membership. So you watch those two videos, you join the community. Afterwards, I will send you what to do in order to set up this trade. If you don't make money with that trade after holding it for 1 month, then I'll refund you your membership fee. I'm that confident in the strategy that you can simply just open that position. And if you're in the red, I don't want your money. The fee, by the way, is $125 per month. Again, if you don't make money with that trade, I will refund that. But of course, it's a monthly fee. So I share all of my trades in real time with the premium members. So for example, over here, this is where I closed a short position on the movement token. Move was also highly inflationary. We opened this over here where we were at the upper end of the trading range on a relative valuation chart. So we always look at the altcoin relative to the rest of the market. And then when we make quick gains, when we get closer to the lower end, we might also take some profit and wait until we go back again to the upper end of the trading range. I know at the beginning this strategy can be a bit daunting, but again, there is support in the different chats. There's also moderators that can help with any questions you might have. So feel free to check it out. The link is directly over here. Just click on the screen. It will lead you to the premium website. If it's the very first time here, feel free to subscribe. I publish these regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.